Thank you, Studio B. Hello and welcome to yet another edition of Stock Review with me, Trishna Patel. JC from IBSAchart.com joins us today and will be answering some questions that I have for him. We will be revisiting some corporate profile stocks. A pleasure having you here with us today, JC.
Thanks a lot, Truth. It's always great to be here, especially we'll be reviewing some of the corporate stocks that we talk about using volume spread analysis.
But first, JC, what is your take on the market this week? More bad news?
Now, not so much, Truth. Now, last week, we saw on the chart here what we are following ascending triangle on volume spread analysis. We call it the one-eye Joe. Typically, the market is at what we call a fork junction. It can move either upside or downside. Now, from the chart that we see now, it does look like we are likely to test higher the 1750, 1760. This is partly because the crude oil has been sliding less, meaning it has some sort of support around $45 US. It did break back up to $50 not before some profit taking, now hovering between $48 US. So as long as the crude oil continues to move sideways with a bias to the upside, we will see likely the KLCI, in this case that you see here, perhaps breaking back to the 1750, 1760, and will have what we call a nice Chinese New Year rally.
Now, moving on to this week's stocks. AXIATA Group Berhad. There was some mixed reactions from analysts in regards to AXIATA Group. Out of the 5 research firms that covered the stock, Hong Leong and Maybank IB maintained their buy call. Kenanga Research put a market perform rating. CMB Research maintained its hold call, while TA Securities kept its sell rating. Target price ranged from RM6.88 to RM7.80. Now, JC, all of this aside, what is your advice to sideline investors for AXIATA Group?
Now, if we look at the top left-hand side of the corner, let's look at the fundamental first. Now, typically average in terms of price earning for the KLSE, now we are looking something between 15 and 16 times PE. Now look at the PE for AXIATA, we are doing somewhere around 26. So what does that mean? It means AXIATA is slightly overpriced. But remember, AXIATA is more of a dividend income play because it's giving around 3% dividend yield. So on that basis, if you look at the chart, the stock hasn't really done much. It's been sort of hovering between RM6.80 and RM7.20. As soon as it hits RM7.20, you got a lot of sellers coming in instead, and you can see market file off. Now, recently touching low of RM6.70, RM6.65 in sometime mid-December, there was a selling that we see, but somehow now the market has recovered. We would see this, much at around RM7 to RM7.05.
Now, in regards to the telco group, AXIATA's 92.59% owned Bangladeshi subsidiary Robi AXIATA will be postponing its listing till the second half of 2016. Robi is AXIATA's 4th largest contributor. Now, JC, can we get to know AXIATA better through your price and volume chart?
Now, if we look at the price volume chart on a weekly basis that we have, in the last recent on the right-hand side, we have 2 arrow plus 1 on the spring, which is on December. Now, these 2 arrow, green arrow means sign of strength, and the first one that we see are 2 tests. Now, test means that the market was tested and it did not go lower because we have demand coming in to overcome the supply, and since then market tried to close higher. But let me tell you this, as soon as the market can close above RM7.10, you will see this begin to move up higher. Now again, AXIATA will benefit in terms of weakening ringgit because any earnings overseas will be repatriated back, and that would give better margins of it. But remember, it also works both ways.
Now, we also examined EVERGREEN FIBREBOARD this week. The producer of medium-density fiberboard is currently undergoing a restructuring exercise till financial year 16. It plans on achieving economies of scale and cost savings through shifting one production line to an Indonesian plant. It is also improving its efficiency by upgrading its machinery and equipment. EVERGREEN will also streamline its operations for a smoother operation flow. Now, JC, is it wise to pick up stocks on companies that are currently undergoing restructuring?
Now, like it or not, this kind of restructuring actually is good news. For start, if you look at the price earning that you have, which is around 4 or 5 times, to me, that is a screaming undervalue, provided if the fundamental, if you look at the balance sheet as well as the income statement, that's good, that will be. But what's very important, as recent on the 12th of January, I believe there's some analyst report initiate coverage on this stocks that we have here, which is EVERGREEN. So that somehow triggered this nice breakout, what we call line change. change to move higher. Of course, whenever the market goes higher, profit taking will set in, as that right now you see on the first bar on the right hand side, you see in upthrust. Now remember, upthrust is a sign of weakness. It has to be confirmed. So likely in the next 2 days, it might just move sideways from here.
Now, the company suffered its first ever loss in financial year 13 following a weaker demand and increased competition. There was also a drop in average selling price and increase in logistics costs. Now, JC, can we have a look at the history through your price and volume chart?
Now, if you look at the chart that we're seeing here on a weekly basis, sometime December we have the sell-off that we have in all markets, and especially in the KLSE. But since then, this has actually moved higher, partly due to the initial coverage on EVERBOARD in here. But what's very interesting, EVERBOARD also carry the same theme with a lot of the so-called furniture and wood-based business industry in Malaysia, because with the weakening of ringgit, that makes it more attractive to do an export base. And I think EVERBOARD is also an export-based business.
Now, we also looked at GD Express carrier Berhad as it proposed a private placement of 10% of its capital. Bulk of the placement proceeds will be allocated for capex and business development to meet the growing market demand in expanding its market presence in Malaysia. Proceeds will also be utilized for its regional expansion into the ASEAN region, while the remaining sum will be used for working capital. Now, JC, let's have a better look at GD Express through your price and volume chart.
Now, if you look at GDX, this is very nice chart. And nice chart means you have strength in the background. It also have a couple of SOS green arrow. You can see that that is also tested, and many of these tested are confirmed, because subsequently bars after the test bar, it moves higher. So we are at the verge of a breakout in here. We have another test. It's around 2 ringgit 20 cents. It's just a matter of time before GDX Express. Now, GDX Express, I'm really bullish about this because it is an e-commerce landscape in Malaysia. Companies which is like Zalora as well as Lazada has been doing very well, because there is what we call the online retailer trend, which we have seen on the Western world, in Europe and US, and they are coming, ladies and gentlemen, to this part of the world, especially more for Malaysia.
Now, JC, you might remember this, but you actually picked out GD Express as a hot stock a while back. Is it still a good stock to pick up right now?
Yes, that is correct. But since then, the GDX hasn't really moved much yet, because the dividend yield at 0.53. But perhaps if you look on the right side, the PE, we have a PE of 70 times, meaning in terms of valuation from fundamental, it is overpriced. So this means this is just merely a trading stocks, because anything that is overpriced, you don't want to keep it too long. When you have a certain profit target, you want to take it and go with it. 70 times, that is way too pricey.
We also revisited Malaysia Airports Holdings Berhad as it forecasts a slight 3% year-on-year growth in passenger traffic this year. There was a drop in inbound arrivals from China and Europe as a result of the MH370 and MH17 incidents. China passenger traffic dropped 20% year-on-year in August 2014, while traffic from Europe also took a hit of 6.1% decrease. Now, JC, can we have a look at your price and volume chart for MAHB for better clearance?
Now, if you look at the price and volume chart, all the bad news, all the the incident that we have with MH as well as the QZ, plus the lack of Chinese tourists, all those, ladies and gentlemen, has been priced in. That's what you can see. Malaysian Airport Berhad is still holding up above 6 ringgit 40 cents. It did try to break down, but it didn't. That means insider smart money are coming to support. Now remember what you see on the shorter term, which is the 50-day moving average, and finally it broke through at 680. No doubt, a lot of analysts are projecting this to be an $8 stock, but it has to break through at least the 7 ringgit 50 cents, which is the 200-day moving average, something that a lot of institutional investors need to look at. Breaking the 7 ringgit 40 cents is the first task.
Now, RHB Research is maintaining its buy call on MAHB as well as its target price of 8 ringgit and 6 cents. The research firm feels that the impact of the QZ8501 incident could be temporary as the incident was handled efficiently. The firm also expects an earning upside on the Sabiha Goshen International Airport. Now, there is also a high possibility that the Turkish airport could be profitable in financial year 15. GC, would you agree that MAHB is a good buy right now in light of a bad year for the aviation sector?
On technical wise, stock wise, this is a good buy. But if you look in terms of PE, which I normally do for any fundamental longer buy, it is above at 61 times, which is very high in that case. I do rate this as more of a trading buy. Perhaps, you know, when it hits 7 ringgit 50 cent, I might change my mind. But as it's one of the best chart ever. You can see on the right side, there's one sign of strength. You could see which is a 2-bar reversal breaking 7 ringgit. You will see this moving back to the 200 moving average.
Now, JC, on to the hot stocks of the week. Last week's hot pick was YTL Group Berhad. Can you catch us up on the stock?
Now, last week, if you look on the right side of the chart, which is the insert, you can see the jagged edge. The chart was about the verge to break out. Let me just blow it up in my case. It was around 1 ringgit 69 cents. And then immediately the next day, we have some sort of a upthrust. Of course, upthrust, it's not confirmed. The market tend to move sideways, we see. And then we see some sort of a spring still holding up at 166. It does tell you one thing. The market is going to move higher. You need to pause. Let a bit of profit taking, and once that is over, we will see a new markup for YTL Corp.
Now, JC, I'm sure we can't let you go without telling us the hot stock for the week. So what do you have for us?
Yes, I have a penny stock, which is Nissin, which is into cookware, as well as a mirror convex. This is pretty much an industrial stock. Now, you can look at in terms of PE wise, it is, there's none PE in here, but it does pay a 1.6% dividend yield. ROE hasn't been that great. That's why this stock is still doing around 1 ringgit, below 50 cents. Now, this is a trading stock, ladies and gentlemen. It can move very fast, as we see. It just broke through the 50-day moving average with a nice line change in there. And hopefully next week when we come, we'll be new around 46, 47 cents perhaps. Yes, we also have a Xiaomi and cash price event in here. Now, it's what we call the IVSA contest. Now, so go onto the website, find out more. There's cash prizes to be won, ivsa.com/contest, and you might just be one of our winners. Check it out. As usual, join us in our Facebook. You can find us Price and Volume in KLSE, and there's more discussion over there, more stock tips and educational material. Thank you.
Thank you, JC. That's all for this edition, I'm afraid. On behalf of JC and myself, have a good trading week. Back to you, Studio B.